Okay guys, back with another weekly forecast update. Obviously bank holiday today, so no review of the charts was done yesterday or today, and no trading was taking place today either. I will not be trading until the early part of next week. Personal reasons, I've seen that the market is not respecting key levels as well as I would like. It's moving away from key zones and levels without tapping into zones that I would like to kind of see, and it's happened very consistently over the last week. So I've decided to kind of take a break, come back in September, and hit the charts afresh from next week, Monday. I will, however, be looking at price action in the mornings in my usual slot that we do trade with TVT between 6:30 and 9:30, 10, just to see exactly what the market develops and how it kind of moves. Looks like August is not a great month for the markets in terms of institutional trading. Although trades were there to be had, golden setups were not really seen, and key levels were not really tapped to the degree and precision that we would have liked to be confident in taking trades and holding them long term. But yes, of course, trades have actually transpired. Money has been made, but not in the way that we would like. We have adapted slightly. I mean, myself personally, I've adapted slightly in regards to how I trade, but I would like to kind of get back to very strict TVT criteria from next month, and we'll see how that goes. So looking top down again, monthly, we obviously saw the COVID wick from last couple of years ago. We saw that it was actually not mitigated a couple of months ago. It's been mitigated last month. Rejection wick formed. The market has driven back down into the wick because obviously there's a huge amount of liquidity sitting down here. I put this monthly wick on there for you guys to see how it's been mitigated and then mitigated again deeper. So we get rid of that. And effectively now we can see that we are looking at 2K levels which are on the lower time frames, because we have obviously got this push down respecting of supply at the top here and then move down to kind of target liquidity, and then obviously from here we're looking to go for buys. On the weekly, we can now see obviously the inefficient wick that we're targeting down the bottom here where the market is driving down. There's a daily wick that is kind of being drawn down very deep into, which we'll get into as soon as we get down to the lower time frame. But on this specific time frame, we can now see that the market has obviously respected supply after retesting a higher time frame wick beforehand, kissing that zone, going back up, respecting supply that formed to kind of break the lows, and then obviously going for sells and then targeting demand that we're now sitting in. As we go down onto the daily, we can see how that kind of consolidates even further, and we can see how the market has obviously taken lows that were sitting back here, taken these lows back here, taken these lows down here, and then obviously was targeting inefficient wicks here, respected, rejected out of that 50%, and then bought out of that zone, and then respected the supply that it created to kind of create the push down, consolidated at this level, tapped up into supply, respected the inefficient wick, and then sold down again. So now we are back targeting the wick below the one that was respected, and we see that the wick itself has been taken to the 50% now. It wasn't prior. Price moved up, bounced, early buyer trap, and then obviously sold down deeper. It's now within the demand of that wick. So when we turn on our supply and demand zones, we can see that the market sits in demand at the moment. However, we do have demand below us, okay, and there is still inefficient price down here which has been consolidated at COVID lows. So currently we're looking at a few levels to kind of be respected in terms of short-term price action. Now obviously buys out of here I'm expecting to be immense, okay. This is going to be, don't write it down in stone, but this is going to be the buy of the generation down here. So in essence, what we're looking at is the market to kind of respect now the demand that is tapped up into. Because we've gone into Monday bank holiday, the market's rejected down. We'd like to see Tuesday come in, respect that wick, and then move up out of this zone to target supply above and possibly even take highs at this point where liquidity kind of lies in a very strong way up until a few weeks ago, to then sell down to target demand down here. Now, Obviously, that could happen earlier. Higher time frame demand obviously is sitting right up top here, where we had the move and dive down the bottom. We took all these lows, continued to go down, was stopped at in demand. Kiss demand, bounced up, respected supply, back down. So our initial point of interest is this zone here. Then we want to see if the market goes up and targets supply up here to then go for sells. Now, obviously, equal high liquidity fuel a move. The market shouldn't really need to dive down deeper below this point. I mean, this is catastrophic bottom of the barrel stuff here, right? It's never been lower than this. So really, we want to kind of see it come, respect this demand and this zone down here to then buy up out of this. Now, when we get down onto the lower time frame of the 4 hour, we can see why we've got this interim supply. So we effectively had consolidation down, taking of lows, creating liquidity, and then obviously respect up bounce, early buyer's trap, and then liquidation down here, lows taken at this point here, and then base drop scenario, and then we've got consolidation in demand after having kissed demand earlier on in the week. So obviously consolidation throughout the week, and then tap up, kiss supply down into demand. So now we want to see how the market comes and attacks that supply again, to either take the supply and target inefficient price action in here, or go further up and target price action there. When we go down onto the 1 hour, we're not going to see much more. You're just going to see refinement of zones. Consolidation obviously is where supply is lying, and we've got inefficient price action above, highs above that even. The areas that we had refined on the lower time frames from previous weeks, we can see that the week before and this week, the market has continually missed our zones that we've got supplied in terms of refined supply within supply, and literally by a few pips every time. So obviously not very clean for us to trade out of those zones, because there always was a danger that the market could come and liquidate and then go for sells. Let's turn on our key levels. Okay, so we're not interested in anything up here because this is all that has been kind of respected and left behind, and that's going to be targeted in the coming weeks. So close to us, we can now see that the market has kind of consolidated pool liquidity, both sides, respected bearish imbalance, and the big supply above. We've got a few large orders up here again, which were not tapped as the market kind of went for sells. We can see the bearish imbalance is respected here and here. Market not taken those, so obviously they're respected but not taken. So again, no clear indication of a sell. Equal highs, liquidity grab without touching the key level, and then it went for sells. Came out of a fair value gap, but again, the imbalance and the supply was so close that it just wasn't the right setup for us to take. So the market has obviously sold tail end of last week, continued to sell down on Friday, as in Monday. Now it has consolidated deep into the demand, the daily demand that we were kind of sitting within, tested that deeply, has now turned the other way, respected supply to a certain degree, that then broke lows. So I mean, supply, interim supply, lower time frame supply is sitting here, which has been broken. So equal highs, liquidity grab, up into supply again, and then sell. So at the moment, supply has been taken. So we have an indication that the market wants to go bullish. So we've got a bearish imbalance down the bottom here, which could possibly be tested. And then we go for slight buys to target key levels, weekly POC, bearish imbalance up top, and then possibly target this supply to sell down deeper to then target the demand below us here. So that in essence is what we are looking for during the week. So buying up to sell down to then buy up out of this in September. We will see what the market does. It is NFP week. So again, there's a few news releases tomorrow, CPI, manufacturing and the like, in both the European time zone as well as the American zone. And then we have NFP on Friday. So again, I won't be trading this week, but I will be watching the market to see exactly what happens and see how the market reacts. And then we can take a decision on how to kind of tackle and attack September when the month starts next week, Monday. Okay, I hope that is information enough for you guys. Hope it makes sense. The market is in an area where we would like to see buys. We'd like to trade out of the zone. So we're sitting in demand at the moment on the higher time frame. We've seen a change in character to go bullish. We want to see that confirmed, and we want to see the market buy up out of this zone to then target an area above as a key level of supply to sell down, take the demand that has been tested very deeply and target demand below. Okay. As with everything, like, comment, share, subscribe, and we will be in touch on social media during the week and into next week. Take care. Bye.